Introduction. The architect of ruin and resurrection. Throughout the annals of human history, few forces have wielded as much power to build empires or dismantle them as the construct we call finance. It is a domain that is viewed, perhaps rightly, with a profound and deepening suspicion by the common citizen. We have witnessed this machinery engineer catastrophic economic collapses, obliterating the accumulated wealth of generations and transmuting essential commodities into speculative tokens for the amusement of the elite. Yet, despite the billions of dollars amassed by its captains, the tangible contribution of this sector to the fabric of civilization often remains shrouded in fog. However, to dismiss finance entirely is to misunderstand the engine of progress itself. In any sophisticated economic system, be it the trade routes of the Silk Road or the digital exchanges of the 21st century, finance is the indispensable tool. It is the mechanism that allocates scarce resources, facilitates the exchange of goods across vast oceans, and allows a society to trade the ethereal promise of future value for the concrete necessities of the present. It is not merely a capitalist invention, but a fundamental pillar of organized society. But like any tool of great power, from the gladius to the atomic bomb, it possesses the capacity for both salvation and destruction, particularly when it grows beyond the control of its masters. Today, the financial system stands as a titan, arguably the most influential hegemony on the planet. Between sovereign wealth funds, colossal hedge funds, and the labyrinthine networks of global banking, we have lost sight of the system's original, humble purpose. The complexity we see today is a manufactured veil, obscuring a simple truth. To understand the peril we face, we must pull back this veil and examine the machine's design. Is the engine still driving the vehicle of human progress, or has it begun to consume the passengers? The strategic shift, a new era of value. Before we dissect the anatomy of this beast, we must acknowledge a new variable on the battlefield. Just as the arquebus changed the face of medieval warfare, artificial intelligence is reshaping the modern economic landscape. We are standing at a precipice similar to the internet boom of the late 1990s. Generative AI is not merely a trend, it is a restructuring of the very concept of human labor and value. To survive in the coming decades, mastery of these tools is as essential as literacy was to the scribes of old. It is the ultimate force multiplier, granting the individual a competitive edge over their rivals. The trinity of production, the theory of capital. To critique the financial industry, one must first define its borders, a task that has become increasingly difficult in the modern era. At its foundational level, finance acts as the great intermediary, the bridge between capital and the classic factors of production, land, labor, and entrepreneurship. Consider the unused wealth of a nation as a stagnant reservoir. The financial industry acts as the aqueduct, channeling this potential energy into productive economic activity to yield a harvest. In the realm of land, finance directs capital to where it can fortify the infrastructure of society, converting raw earth into housing or agricultural developments. Regarding labor, it provides the liquidity that allows the worker to secure assets, such as a homestead, pledging the value of their future toil in exchange for present stability. And then, there is entrepreneurship, the spark of innovation. Here, finance plays the role of the gatekeeper. It must decide which ideas act as the catalyst for civilization's advancement. Imagine two figures approaching the gatekeepers of capital, both claiming to possess the cure for a devastating plague. One is a decorated oncologist, a veteran of the medical campaigns. The other is a charlatan with no training. It is the solemn duty of finance to allocate the limited resource of capital to the former, ensuring the survival and betterment of the collective. When this system functions, it rewards the innovator and the intermediary alike, creating a cycle of prosperity. But this investment is a gamble, requiring rigorous intelligence gathering, or due diligence, to distinguish the visionary from the fool. The industrial catalyst and the shift to consumption. The most potent demonstration of this alliance between capital and innovation was the Industrial Revolution in Britain. From the late 18th century into the early 19th century, the world was transformed. The construction of the great textile mills, the forging of steam engines, and the mechanization of labor required an unprecedented mobilization of upfront capital. these were colossal projects that would not yield a return for years. Without the financial institutions to aggregate and deploy this wealth, the industrial age would have been strangled in its crib. However, as the 20th century dawned, the beast evolved. Having saturated the supply side of the economy, the financial powers turned their gaze to the demand side. After all, what use is mass production if the masses lack the coin to purchase the goods? Thus began the era of consumer credit. In the roaring 20s, the average citizen was suddenly empowered to live beyond their immediate means. Automobiles, appliances, and furnishings, once the province of the wealthy, became accessible through the magic of debt. By the 1980s, this was epitomized by the credit card, a talisman of instant gratification. From 1950 to 2008, United States household debt exploded from 24% of GDP to 73%. The industry was no longer just building factories, it was financing the very lifestyle of the population. The modern deviation, the hourglass, shattered. While this expansion drove economic growth, the creature has now mutated into something unrecognizable. The sheer scale of modern financial institutions rivals the GDP of sovereign nations like New Zealand or Portugal. But size brings with it a divergence of interests. We must ask, do the private machinations of these banking empires still align with the prosperity of the realm? To answer this, we look to the insights of Rana Foroohar, a strategic analyst for the Financial Times. She posits a compelling analogy, the economy as an hourglass. At the top, we have the savers. At the bottom, the borrowers, entrepreneurs, and homeowners. Finance was designed to be the narrow neck, a humble conduit regulating the flow of sand. However, her reconnaissance reveals a disturbing shift. Today, only approximately 15% of the capital circulating in the American system is utilized for productive investment, funding new enterprises or building homes. The remaining 85% is trapped in a closed loop at the top of the hourglass, a frantic cycle of buying and selling existing assets. It creates no new value, it merely inflates the price of what already exists, enriching the holders of assets while the streets below starve for capital. The casino of the elite, speculation and asymmetry. This transition marks the move from long-term investment to short-term speculation. Across the globe, armies of analysts and algorithms execute trades measured in nanoseconds. In the foreign exchange, cryptocurrency, and commodity markets, this speculative frenzy creates a volatile ocean of noise. While they claim to provide liquidity, this activity is largely a zero-sum game. For every victor, there is a vanquished. Value is not created, it is merely transferred from the chaotic, uninformed masses to the disciplined, information-rich elite. This inequality is driven by information asymmetry. In the theatre of war, the commander with the best intelligence wins. In the markets, the player who knows the true value of an asset before the public does, holds the winning hand. While insider trading is legally forbidden, the industry has developed sophisticated methods to legally harvest this advantage. High-frequency trading algorithms, operating at speeds the human mind cannot comprehend, extract billions of dollars annually from the equities market. It is effectively a tax on every other participant, a rent extracted by the technological aristocracy, the drain of human capital and the widening chasm. The consequences of this dominance extend beyond the ledger. The allure of immense wealth has caused a severe brain drain in the West. The brightest minds of a generation, graduates who might have cured diseases, engineered new energy solutions, or led the civil service, are instead seduced by the financial sector. They dedicate their intellect not to the advancement of the species, but to the optimization of algorithms that buy a stock at $213.72, only to sell it a microsecond later for a penny more. This misallocation of human talent is a strategic disaster for civilization. Furthermore, this system exacerbates the divide between the landed gentry and the common citizenry. Asset price inflation has generated $160 trillion of paper wealth globally. But who owns the assets? In the United States, the vast majority of stocks and bonds are held by the top 10% of the population. As the stock markets soar, decoupling from the reality of median wage growth, the owners of capital ascend to the heavens, while those who rely on labour are left anchored to a stagnating earth. Conclusion: the poison in the dosage. It is easy to cast the financier as the villain in our story, yet we must concede that the industry performs a vital function. It is the lubricant of the economic engine. Without it, the gears of commerce would seize and the machine would grind to a halt. It allows for the transfer of risk and the smoothing of consumption. But as Paracelsus famously noted, the difference between a medicine and a poison lies in the dosage. We have flooded the engine with oil, and now it is choking. There is no natural predator to check the growth of the finance industry. If it cannot generate profit by creating value, it will turn to extracting it, cannibalizing the very economy it was meant to serve. Reining in this colossus will require a reassertion of political will and regulation. But the first step is recognizing that the balance of power has shifted dangerously. If you enjoyed this briefing on the mechanisms of our world, you know the drill. Smash that like button, subscribe to the channel, and drop a comment below. Tell me, do you think the financial system is a tool or a tyrant? I'll see you in the next one.